Hi guys, and welcome to TCM Education. In this video we want to discuss a topic that's exciting, interesting, but can do a lot of harm to day traders, swing traders, and a lot of harm to investors if you are stupid enough to fall for this trap. And I'm talking about reverse stock splits. Now, what is a reverse stock split? It means a stock that's about to be delisted, most of the time from the Nasdaq, but it also can happen in the New York Stock Exchange, and the stock price goes beyond below $1, and in that case the Nasdaq gives you a period of time to recover above $1. If you don't, you are being delisted. But there is a trick, and the trick is to do a reverse split. What does it mean? Let's say your share price is 50 cents. You do a 10-for-1 reverse split, so the share price comes to $5 instead of 50 cents. How is it possible? Instead of 10 shares worth 50 cents, which is basically you own $5 of the company, you get one share of $5. So this trick can work. Now, most of the time, successful companies like Apple, like Nvidia, like Microsoft, like Google did the opposite, or Amazon did the opposite. They did a normal split where they had the price went up, let's say to 1,000. They do a 1-for-20 reverse split, and so instead of having one share of 1,000, you have now 20 shares of $50. Basically, it's the same deal. It creates more liquidity, brings in more investors. That's the normal thing to do. Terrible companies that go almost bankrupt do the opposite and trap a lot of novice traders and sometimes even investors into the potential that here it is, a stock is doing this amazing move while the move is basically a hoax. And of course, nothing changes in the financials of the company. Just the appearance is different, but the underlying company is the same. So let's take a look at SharpLink, which is a stock that we discussed many times in our channel, because the movement in SharpLink was anything other than amazing. Let's take a look at the split first. This is the split date. They went 1-for-12. So instead of having a share size of 20 cents or 50 cents, you can even see on the chart what was the risk price before or at the split. They got again 1-for-12 means if the share price was 50 cents times 12, that's $66, and that's the new price after the split, 1-for-12. Then the stock goes less than 2 weeks sideways, and then news are coming out, and you can see that the stock starts to climb, and probably this is the place where everybody observes this huge move. Remember, the split takes away a lot of liquidity. So if let's say before the split there were 10 million shares available, now let's say the split is 10-1, there are only 1 million shares available to trade. Altogether, maybe some of them are in holdings that are not available to trade by the public. Bottom line is that the liquidity drops significantly, and when the liquidity drops significantly and there are good news, I'm ignoring here the short part, the short sellers part, because I don't think they are in this game. The stock can move the way this stock moved, and there were of course amazing news for SharpLink, and the stock went from basically from 6 to 120 in 1, 2, 3, 4 trading days. Overall, it's back at 12 now. So ignoring this crazy island, we call it an island, this move that was, I guess, totally unsustainable, but keep in mind somebody, and this is that can be investors, trader, speculants, stupid people. I don't know who bought this move higher, but somebody lost a lot of money here, it's clear. and somebody made a lot of money. That's obviously a byproduct of that. Anyway, I want to talk about this event because we are just going today to the same event again. Okay, a stock that let me bring it in actually. Let's go to CERO. That's the symbol CERO. Up 222%. And here it is. You can see at 1/4/20 stock split. That was June 13, meaning Friday. That's two trading days ago. I mean, we traded Monday, today is Tuesday, so basically 1.5 trading days ago, the stock does a reverse split. And out of the blue, there are amazing news from the FDA. Again, didn't read exactly what happened here, but the stock is up 200%. So what happened here, basically? First of all, they liquidated the liquidity. Before the reverse split, they had 10 million shares of common shares that were available to trade to the public, and now 20 to 1 means there are only 500,000 shares available to trade overall, but maybe 30 or 40, I don't know which number, is not available to trade at all because it is in some holding. So the maximum amount of shares that the public or traders or investors, whoever is going to go with this stock, is about to trade or can trade is 500,000 shares. So that's the float, 500,000 shares total, which means any spur in demand can create a huge unsustainable move, which has nothing to do with the news, just because there isn't any liquidity. Okay, so now that's what we're seeing here in this Cero. So the stock went from what was the price? Like 40 cents to $8, and now it's 23 and counting as we speak, and it was as high as 27. You can see as high as 27 today, following this type of news. Let me actually, you know what? Let's take a look and see what were the news. One second. We have plenty of time to analyze this. Again, most of us know nothing about gene therapy. And the news is that Cero Therapeutics Holdings announces FDA orphan drug designation granted for CER, whatever, the treatment of. And it's considered by traders and investment good news and good for them, maybe good for us as day traders. Let's take a look at the intraday chart. That's how the intraday chart looks. Now when you see these bars, sideways bars, that means that the stock was halted here and here and here. So there are so far you can see that most of the holds are on the upside, but the stock can be halted and open down 10% or 20%. I mean, this when the stock is up 200%, 10% is not a big intraday move. Okay, so us as day traders, what can we do? Okay, if you do want to trade this event or participate and you think that you're missing out, the FOMO is one of the worst adversaries of traders, because we're seeing a lot of stuff. This is one type of stuff that we normally you don't want to see, but you cannot ignore it. So you're looking at it. I will move to the 1 minute bar and see, maybe we can see something different using a very small resolution or a small resolution. Keep in mind that this stock moves 10% per minute. It can move 15% per minute. It can drop many points in a 1 minute bar, and the reason for that is that it's very poor in liquidity. Stop losses won't work. I mean, you can post stop losses, but they are likely to be executed at an unknown price, and if you try to exit with a limit order and there is an avalanche of sellers, and keep in mind an avalanche is here, there aren't that many sellers after all, it's just the liquidity is so poor, of course the limit order is going to get ran over. So there's lots of risk here involved in this type of trading. Now if you do see a technical pattern, and let's say in retrospect I can tell you that there was a technical pattern looking back at this 17 play here, and the risk was $1 at least. I'm not talking about the spreads here. You can see this entry here, the number is 17, but that's easier said than done. I don't know if this at this point the stock was even in the top 20. Let's say it was, okay, and you observe it. It's such a tough trade that I think or what I want to say or point to everybody that's thinking that you're missing out here, you're not. Okay, it's way better to trade a normal trade, and we've seen over the last 24 hours a bunch, an array of longs, starting with just to mention a few, Roku from support, SATS from support, QUBT, ST Lauder, MGM, OUST, STNE. That's all names from yesterday. I will post them in the description just to make a reminder that you can go to these charts of Monday, June 16. Look at those charts and see how easy in retrospect versus this craziness. And again, the craziness is because the lack of liquidity. This is a terrible stock that maybe can recover, but you know what? Let me check out if there are any institutional holders here in this company, in this stock. I don't want to say that I guarantee that there aren't, but maybe I can check. Hold on a second. Let me try. We still have a couple of minutes for this video. My guess, no institutional holders at all, 0. But you know, maybe I'm wrong. I'm going to Yahoo Finance, typing in the symbol of the company, and it brings me a list of topics, summary, news, chart, conversation, statistics, historical data, profile, financials, holders, options, and whatever. Sustainability, I don't know what it even means, but holders is important because we want to see at every stock that we are day trading, we want to see institutional trader. That's a guarantee that things will work better versus no institutional traders. And I don't see anything here. Yeah, well, it doesn't show anything. I'm just pressing on holders. There's no response from Yahoo Finance. Okay, let me summarize. First of all, the opportunity is there. Okay, if you will feel comfortable with trading with 10, 20, 30% stop loss, and you can survive this nightmare if it goes wrong, fine. The risk reward can be amazing, and we saw the example of SharpLink. Otherwise, the normal trading way, and we had a video about it, the rabbit and the turtle, is the right way to go. Thanks for being here with us in this video. Please remember to share it with your friends, and I will also post the link to our webinar over the weekend, and I would love everybody here to attend. Thanks a lot, and we'll see you in our next video.